Hey everyone, we're going to discuss another topic today with us, and this topic is: should you have more than one bank account? What should happen if my bank get rid of me? That's key. So here's a quick answer: you should never have more than one bank account. Done. Easy. You can move on if you want to, and I'll discuss why. Okay. And so firstly, about myself, I'm the CEO and founder of MoneySave. And MoneySave is a payment link, which means that you can tap to make payments effortlessly everywhere. So everywhere you are, just tap effortlessly make payments. Okay. The whole tap to pay thing is fairly newish in our history of money, not in Orukka. Orukka is new as well, by the way. But I think for us, we've always used cash for years. We've done a lot of that. And obviously, convenience becomes key after a while because you don't want to be walking around with cash. So, what happened now? People try to move into cards. You have a lot of cards today, cards on your mobile phones, card, virtual cards, and the physical cards or cards on phones to tap. So, tap to pay has always been there. Obviously, with time, we see that our phones can barely survive. So this phone now, the battery is almost dead. I'm sure it's the same with you. Once it's evening, your battery's gone. Secondly, as well, is that there's a lot of theft these days. You don't want to be walking around with your phones. If you live in New York, London, and any of the top locations, when you bring out your phone and walking around with it this way, being tracked, people are looking at you. There's a gang that's always works together, and there's a 60% likelihood of that phone being snatched. But we don't need to walk around with our phones these days. There's a lot of information on this phone. I mean, I was looking at my phone the other day. There's about 140,000 pictures in it, and I don't take a lot of photos. Imagine the others, which is crazy. Yeah, so what you don't want to do is walk around. As soon as that phone gets snatched in a split second, people, first, you can't run after them because it's not just one person. Other people just kind of, you don't know who's walking together and they delay you or track you back. These people have done this for a while. It's not their first. You should watch YouTube videos of that. It's scary. So that when it does happen to you, I think it makes you think twice. One of my colleagues, his phone got snatched and it was stabbed. He came from Switzerland to London, yourself. He got stabbed and they just about missed his lungs because he was holding his phone out and they tried to grab it. So that made us even work on this faster. At least if we can solve one problem for one customer, we are happy. And obviously, we have a few more customers globally now who just have their phones on their payment, which is a ring on their fingers, which is straightforward. No one's going to grab this one. They could grab the phone or your wallet, but it takes a while to grab this. And if they do, it's not your salary, it's not your savings, it's a payment account, which means it's tracked, but you can cancel it at any point, anywhere you are. So it's almost useless. It's just the value of this ring, which, again, the question now becomes: you get a gold ring, a silver ring, a diamond ring, or a simple flexible ring, or a bracelet. So we also have bracelets. So that's it. It's interesting. So when I talk about how to manage your accounts, I'm not talking from someone who wants to make money from banking. We do this. I'm not talking from what we read online. We're working on this right now. So this is from a practitioner, and it's good to have that viewpoint, along with any viewpoint you have from journalists, from lecturers, who've studied this theory, and they also get practical view. I think that's important. So in my opinion, no. Yeah. So if you look at the history of banking, so again, I've been in banking for several years, 20 years. And when I started in banking, when I first started as a child growing up, let's start with that. And I was born in the 80s, so I've been here for a while. But those days, they used to have a local bank. So you have one bank that does everything. So you go in, banks wanted to place their branches everywhere, especially in metropolitan and cities. If you have a branch there, that bank catered for that community, which was cool because one, if you're a bank manager in a profitable place like uptown or downtown New York or wherever, that's cool because you have a lot of people who walk around that area. If you walk around the bank those days, you have that work in the bank, you get your salary there, you get your mortgage from there, most likely, or you get your credit card from there. How about that? So they sell you that. They also sell any other thing in terms of loans, your student loans, your children go to school loans, buying your first house. So the bank used to be everything. It was a bank for that, right? Also, your safety box used to be in the bank as well. So everything was in one place. But things got disrupted a long time, especially around the .com where you could go online. and then other people could offer these things. Then fintech started coming in, and we're one of those. Obviously, we're fintech, but we're not just fintech. We're fintech and wearables. So we do both, which is interesting. This is a new one, right? So that's coming. But banks then used to have, used to have one branch, but not anymore with fintechs. You can have one person that actually then does your loan or your phones. Another person does the loan, so you can now compare loans to find the best deal. You don't have to go to your bank. Then the next point now will be, okay, how about mortgages? Well, there's a mortgage platform, a fintech platform, where you can go and find the best mortgage for yourself. So suddenly the bank on your street is not the most favorable, right? It's now online. Even banks themselves realize, wait, we better do what fintechs are doing. So some banks, most banks are going online, closing down branches. And it's unfortunate. I mean, for people who believe that they still want to go to a branch, I think, that they lose. So then that's important, which you avoid. But things have changed a lot from those days where you have to go in just to open a bank, you have to fill in loads and loads and loads of paperwork. Also, they find out so much information about you and everything was written. Now you're now an app, download and can see you, especially with AI these days. You can actually see, you can show your passport. AI matches it together and lets you know if it's real or fake. And again, not saying that there's no fake out there. But the point is the idea can now open up your branch anywhere you are. Number two, you can also compare products, which is what you want to do. And that's an advice. And that's what I've said from the start. Do not have one bank account that gives you everything, because it's in their interest to give you one thing and sell you more while they make your money. Okay, so they can give you a free current account. Check the video on that one as well. That's a good one. So they can give you a current account, give you a free debit account, but they charge you on the credit and they charge you a credit card, which is very good. Oh, and that doesn't mean they're the cheapest. So imagine if you got those two and then you went to get a credit card, you have a better deal for yourself. And we talk about mortgage. So they give you a mortgage rate, which when say, oh, if you stay with us, we'll give you this mortgage. You can take that mortgage, go into online, takes you a second, go online and check for cheaper mortgage, and you'll get that. Especially your credit rating allows you. So that's the summary. Shop around. Don't stay with one bank. That's it. And we can just change this topic if you want to. But here's what I'm going to ask about, hey, why don't we stay with one bank? And it's always good to consider that, right? So here's conditions where you don't want to stay in one, where you might want to stay with one bank. It's good, okay? For instance, for, reduce fees, because each fintech charges your fees, and give or take, you could actually start losing money if you go to some fintechs, okay? Maybe they give more. Some fintechs like Amex would say you're paying 600 for their, for their Centurion card or their Platinum card. So that's costing you more in fee, but you get more in terms of benefits that your bank won't give you. So that's important. If you're doing that, if your bank coincidentally gives you everything and gives you a platinum like Coutts. So Coutts also have a private banking section where they can give you in the UK, right? With Coutts in the UK. They'll give you a lot more than just your credit card, especially if you're earning that much. Then in that idea, I think is a good way to stay with them. You stay with them, good idea, and then you get more benefits from staying with them. And there's also, again, if you have confusion, so if you're the kind of person who's always confused on what bank goes where, then stay with one bank, and that's it, But in truth, these days, it's easy enough to just check where things. I mean, if you have the bank on your finger, then you're not going to be confused. You know this is your bank, so well, this is your payment. So that's important. So if you're confused or you're one person that likes one thing only, then you should stay with one bank and have all your credit, loans, mortgage, everything from that one bank. Especially if you don't mind fees, okay. And lastly, as well, then I think the benefits as well maybe for budgeting. So if you find it easy to see one payment going in, then see another payment coming out, then budgeting makes it easier, right? And that's it. So that's where the good part stops in terms of having one bank. The negatives are a lot, which I've just mentioned. They're like, what's winning at this? So who wants you to stay in one bank? Is a person selling to you. So the advantage comes more in the bank. They want to just have one you and sell everything to you, everything to your family, and they don't care. They don't, not like they care, but obviously the bank is not going to give you cheapest mortgage. The bank will not give you cheapest credit card. And you always shop for that. So in bank, if they give you an insurance as well, why not give you the cheapest? So you have to shop around for that. You owe it to yourself and in the future to shop around. So that's important. So there's also the other point as well in terms of risk, which I think it is important to think about, right? So if you have all your cash in one bank, which I've seen a lot of customers complain about this, it's possible, one, for the bank to just freak out with one transaction. Banks want to understand what you're doing, where the money is coming from. So if for some reason you always get, 5,000 every month, 5,000, and you spend a bit and they can see, they can track what's coming in and out. And for some reason you have a payment from crypto for 20,000. That's an anomaly. My team, what we do is we have a layer that connects and everyone has a decision, so you can get a decision quickly. But some banks don't. So some banks, especially, I'm not going to mention their name, they've got 50 million customers. You think they have the time for this. So what they do is they pack it to one corner and then without your account, without your money, without your expense, you can't pay rent for months. So that's something to consider as well. If you have all your bank, all your funds in one place, it's possible for a mistake or a mishap or something to happen where the banks are not sure themselves and they have to investigate. And it takes months because they just don't have the power to get there, the manpower to get there. Or worse still, they just don't know what to do. So they pass it on and it keeps escalating to one director who's sitting there has a backlog of customers to look at manually. Eventually it gets done, but it takes months. And you know how tough that is. So to avoid that, please have a multiple account. Then I'm going to the best way to actually structure your multiple accounts. But you must have multiple accounts because of things like this. There's also banks going down. That's a lot. I talked about how banks make their money. So banks can go down. Their business is for investors. Investors give them money to invest. You give them money. They pass on that money and they borrow it out. So there is a default rate. So if they lose that money, they can go and get, a bailout. But in truth, there's also insurance that covers you in that. That insurance is per bank. If you're rich enough to have over 250,000 in the US, $100,000 or euros, so 100,000 euros in the EU area, different countries have different continents and currencies have different protection. But the protection, as far as I know, all the continents I've worked in and know and deal with are all per bank group. So that means if you have an insurance with JP Morgan up to 250, that's it. So if JP Morgan goes down, your money is down up to 250. Oh wait, but imagine if you split that 250 and they have 250 at Bank of America, then that means you're covered up to your 250. Right? If both go down, which is not the case, you have one goes down, you get covered 250. If both of them go down, you get covered with your 500,000. So that's important. Again, we know banks go down a lot, surprisingly. Even the biggest banks go down just because of risk. So to avoid that risk, make sure you have multiple accounts. Make sure you have loans with different people. And I will go into that as well. Get a pen for how to structure your multiple accounts. But please make sure you have multiple accounts. Make sure you shop around and get the best. Another reason why you might want to have this is also for budgeting, right? So we talked about budgeting on the one side. There's also budgeting on the other. So you want to see that you have money coming into one account. If you have an expense account, you want to make sure it goes into an expense account or a savings account. It might not be with the same bank. Even if you did, you're not seeing the problem. So put in a savings account and make sure you see retirement, you also see in a retirement account. So these are important to see. Always how about expenditures? You're looking after yourself, paying yourself. You have to pay yourself. You have to treat yourself. You've been working. Okay, so you might want to say, at this time I'm going to the cinema once this month. That goes from somewhere. It could go from a current account or it could go from an expense account where you just tap to make a payment. So that's important to know as well. That it's true. It's important that obviously if you have a business, you can't have everything in one account. The bank might try and force you to try and get your business by having your business account and personal account in one account. You shouldn't, and you should get a separate account for that. Again, just for risk diversification and making sure that one goes down, you're covered. With the other, and you still get insurance up to the allowed amount in that group. If multiple groups go down and you have multiple accounts with multiple groups, you're still covered because again, insurance is paid per bank group and you're covered per bank group. That's the rationale behind that. And so I promised to talk about how to structure your group account. Okay. Yeah, four things you need to know. Four, I think I'll call it. Let's call it DRSP. So write that down somewhere. DRSP. So your first know is your banking account, right? So that's what we call it. At the US, you guys call it a checking account. We just call it a current account. It's an account where your money, your salary goes into. That's it. So that's how you get paid. The salary goes into the account. If you're in two countries, guess what? You should have a countries but you need two different accounts. So if you have a job these days, people have multiple jobs, right? Which is good. If you have multiple business, then you get paid multiple, maybe one in Canada, one in the US. get him into a different checking account. So a checking account where money comes into, and then it's allocated to the others. It's allocated to your retirement account. Have a retirement account, no matter how small it is. Yeah. Have a savings account, no matter how small it is. Those two are important. And the last one then is your expense account. I'll talk about each. So let's talk about the savings account. People worry about savings a lot, right? People find and complain. So first, they just search savings account, high yield savings account. There's a lot of high yield savings accounts today. There's a lot of investment accounts today, and crypto if you wanted to. But make sure you have a savings. And your argument is not, oh my God, I should have invested in this account that pays five. And we have nothing against this account. And if we're not paid by any of the high yield savings account, we're not paid by banks. We work with banks, but we're not paid by any. Okay, that's why we're fintech, we're independent. But in my opinion, I think you should search for any retirement savings account. Okay. Because if you have no savings, the fight is not with which account pays the more. The fight is with yourself and your habit. Get into the habit of savings first. If you can save, they can worry about what percentage goes where. Because right now people don't, and they believe, oh, you live paycheck to paycheck, and as soon as you have 500 quid, you're like, oh, I've got 500. I want to look for the best high yield savings account that can give me 5%. Oh, wait, I'm not going to go with that because that's only 4.5%. Okay. And it adds up over the next 20 years to be okay. I get that. All right. And a lot of influencers go just back on and on about that without looking at the people behind this. So most people behind this is more or less about the habit. You get into a habit of savings. If you can do that first, they worry about which high interest you should go with. And we can advise that as well. Again, we are a fintech app, so no one's paying us. But my idea is, and I think you should as well, is to get into a habit of putting X amount. Could be a dollar, it could be as small as it is, doesn't matter. Just know that you have a habit of putting that money away and not touching, which is your savings account. That should be a savings account, it could be a high yield savings, could be a low yield savings, call it money market fund, ETF, the free ETFs these days. Robinhood is there, they are not paid by us. There's also, Charles Schwab, but there's a lot around the world that you can use. Yeah, so most would even give you a free savings account. Some would actually go straight to an ETF if you chose. An ETF, you can go with an ETF that corresponds to your date of birth. So just look at ETF date of birth. There's a lot there. I don't want to call any names because we're not marketing them. So here's the idea. Go in, get into savings, and start saving as a habit. Get high yield. Forget people who try and mince on exactly and penny pinch on exactly the percentages. That's true. If you save and you have an extra 0.5 over the next 10 years, oh my God, that's compound. What if you don't save at all, which most people are doing? There's about 65% of us that live is paycheck to paycheck across the world. So guess what? The problem is not about the percentage split. The problem is about saving a small amount every month. So please do that and obviously look at the diversification again. If you're saving a lot, if you're saving expectation, split the savings account is more true. Second point is retirement. You need to have a retirement. Obviously, in most countries across Europe, USA, you're forced to have a retirement account, but that's basic. If you look at how much you're spending now, imagine 20, 40, 50, 60 years time, you're going to spend more. Either because of inflation or just because of, lifestyle creep, which we all do, right? We all have houses, we have cars, we have a lot more bills going out when we get older. So, and then we have children to pay for as well. So my suggestion would be to put a little bit as well into your retirement account. Have a look at it and see that's maximized. So that's what you need to look at. Go, wait, what's the rate of this? Should I increase this or not? Because it's mandatory to get it too. So please get a retirement account. So again, remember, you go your bank account, go your savings account, go retirement account. I like to call this last one personal account. You could call it a pay yourself first account. We call this a spoil yourself account. What that means is, again, if you look at your typical account these days, your account will come in and has all the money in it and it just goes out, right? So you have your, subscriptions, you have your rent, you have your, things that must go. It's okay. But here's the point. I don't think you should still use that same account for your pay yourself. What if you're married? Your wife goes in there and blows all the money. It's gone. But what if your partner works, he goes in there as well and takes all the money and he forgot to pay the rent for that month, or he forgot to pay the light bill and your partner doesn't know. So I need to have a pay yourself account. I call this an expense account. That's where we fall it. So some people use also, I think, for just their day-to-day account to transfer the money straight from there and it goes in there they use it. But for me, I think with that, I would suggest you use this as a pay yourself account. So that means you go in, you tap your card. Again, you go on the line or you pay direct debit, you pay all your bills. And what's left, you have in your card. So now, to get a coffee, you don't need to go to your real account. You get it from here. It comes in here automatically. So every month, everyone knows if it's $500, you have $500 for coffee, for dinner, for restaurants, for concerts. If you need to travel, put it here as well, and that's what you use. So I call that pay yourself account, which you should have. It should not be your current account or your checking account. It shouldn't be your day-to-day account. It should be an account that you use for yourself. That's convenient, it's quick, you can get to at any point. If you're going to catch a train, you pay from there. That's it. If your phone is lost, your battery is dead, don't worry about it because you have your day-to-day expense account. If for some reason you're going to a concert, YouTube, Bono, whoever is out there, Kendrick Lamar, you don't want to take your phone out unless you're recording, which you shouldn't be. Your wallet, again, if you're drinking, your wallet could go missing, that's trouble. We know a lot of people that lose phones and wallets. If you have this, you just have to pay wherever you are. So I think you need to have that fourth option, which is basically your current account, retirement, savings, expense account, pay yourself account. So that's it from my side. I'll see if any other questions come up. If you have any questions, let me know. We're happy to address it, especially from us as practitioners. We're doing this real time. We're doing this for our customers. If you have any questions, you can ask on the app. If you haven't downloaded the app as well, please download it. It's money safe. If you haven't bought the ring already, here it is. It's called Orukka ring. So you can buy the ring, which is a payment ring, a fitness ring, or you can get a bracelet as well. All these are online. We're the first platform to bring all this together so you see it. We've just launched. We're excited about our users. This is part of the excitement, just getting the community, which I'll find time to talk to. So have a nice evening, day, morning, wherever you are, and I'll talk to you next time.